In April 1996, a tower rose through the Las Vegas sky like a dagger, 1,149 feet of concrete and steel, soaring above all others, an icon of audacity and ambition. This wasn't just another casino. This was the future of Vegas. But today that giant stands in the shadows of newer, glossier rivals. It was a marvel, now it's struggling to survive. Before we dig into why the Strat, the once brilliant jewel of Las Vegas, is faltering so badly, hit that like button, subscribe, and ring the bell if you want the real story behind Vegas' biggest downturn, because what we're about to reveal will shock you. Fast forward to 2025. That same tower still stands, but everything underneath is crumbling. Parent company Golden Entertainment just reported a 37% revenue collapse in 2024, down from $1.05 billion to just $667 million. Hotel occupancy at the Strat fell to 69% in the second quarter of 2025, down from 73% the previous year. By June, occupancy crashed to just 60%. But the numbers only tell half the story, because what's killing the Strat isn't bad management or poor service. It's something far more insidious, something that's been eating away at this property since the day it opened. And nobody saw it coming until it was too late. Now let's go through the reasons for the Strat's crises. 1. The curse that never ends. Let me tell you about a decision made in 1973 that's still destroying the Strat today. A man named Bob Stupak bought cheap land north of Sahara Avenue, just past where Clark County defines the official Las Vegas Strip boundary. Everyone warned him. They said tourists would never walk that far. But Stupak built anyway, convinced his tower would become so iconic it would force the Strip to extend north. He was wrong, catastrophically wrong. Within 1 year of opening in 1996, the Strat filed for bankruptcy. 1 year. The curse of location killed it immediately. Here's why this matters in 2025. Nothing has changed. The Strat sits 3 miles, 4.8 kilometers, from Bellagio in the heart of the Strip. That's over 30 minutes of walking. Even the public bus takes 22 minutes. And what's between the Strat and the real action? Naked City, a neighborhood with higher crime rates that TripAdvisor reviewers describe as littered with crackheads and prostitutes. According to the Vegas tourist website and multiple safety guides, tourists are explicitly warned, don't go behind the Strat. The area behind the tower is known as Naked City, and it's an area tourists should avoid. One TripAdvisor review from April 2025 stated bluntly, to walk to Sahara is like walking through Skid Row. Always seemed like there was a police presence in the area. No one casually stops by the Strat. Every visit is deliberate. And when tourists have to deliberately choose your property over dozens of closer options, you've already lost. This isolation devastated casino revenue. According to Golden Entertainment's financial reports analyzed by CDC Gaming and YogaNet International, the Strat's gaming segment, which should account for the majority of total revenue, depends entirely on spontaneous visits. Without foot traffic, casino revenue collapses. Hit that like button if you're starting to see the problem. We're only getting started. The 80,000 square foot casino contains 750 slot machines and 44 table games. But when your target customers are budget-conscious players who must intentionally drive to you, those numbers mean nothing. Gaming revenue in 2024 reflected this brutal reality as Golden Entertainment's overall revenue dropped 4% after adjusting for sold properties. Non-gaming revenue suffered even worse. Hotel average daily rates hit only about $80, among the lowest on the Strip according to multiple 2025 financial analyses. Overall occupancy reached just 75% in the fourth quarter of 2024, while Central Strip hotels regularly achieve 90% or higher. The top of the world rotating restaurant? It lost spontaneous diners, forcing reliance on low-price promotions just to fill seats. Thrill rides on the tower top saw declining revenue because fewer tourists happened to stop by. When you're over 30 minutes walking from Wynn, nobody just wanders over for sky jump. But if isolation was the Strat's disease, what happened next was the death sentence nobody anticipated. 2. Surrounded and outgunned. 3 giants have risen around the Strat, with a combined investment exceeding $10.3 billion. $10.3 billion. First came Resorts World in June 2021, the most expensive resort ever built in Las Vegas at $4.3 billion. 88 acres, 3,500 hotel rooms, 117,000 square feet of casino space. According to financial reports from World Casino Directory, Resorts World quickly captured international and Asian markets that the Strat desperately needed. Then Fontainebleau opened in December 2023 for $3.7 billion. The tallest hotel in Nevada, 3,644 rooms, with the largest standard rooms on the Strip. 150,000 square feet of casino. A 6-acre pool deck that makes the Strat's pool look like a puddle. And you can't forget the Sphere, $2.3 billion of technological insanity that opened September 2023. The entire world watched U2 concerts and Postcard from Earth. The Sphere alone pulls more international attention than the Strat has generated in its entire history. Golden Entertainment responded to this $10 billion siege with renovations, minor renovations. In 2019, they renamed Stratosphere to the Strat and spent $140 million on upgrades. The Las Vegas Review-Journal reported these changes were too minor to make a difference. The results? Room occupancy in Q2 of 2025 was only 69%, down from 73% the previous year. An attempt to draw audiences by hiring entertainer Terry Fator also failed spectacularly. His show closed early in September 2025 due to pathetically low ticket sales, according to KLAS 8 News Now. Meanwhile, their billion-dollar rivals host blockbuster concerts and international sporting events. With only 2,427 rooms and one of the lowest room rates on the Strip, the Strat lacks scale and appeal to compete. Golden Entertainment's Q2 of 2025 revenue was only $163.6 million, a 3% decrease from the same period in 2024, according to CDC Gaming reports. This is a property dying in real time while competitors thrive. If you're finding this investigation valuable, smash that like button and subscribe so you don't miss the conclusion. But revenue declines and failed entertainment aren't even the core problem. There's something deeper, something psychological, that's been rotting the Strat from the inside since Stupak sold his dream. And it might be unfixable. 3. The identity crisis that killed the dream. Here's the question that destroys properties. Who are you? Wynn sells luxury. Caesars sells Roman grandeur. Circus sells cheap family fun. So what does the Strat sell? The answer is terrifying. Nobody knows. Under founder Bob Stupak in '96, the Strat's identity was gimmicky audacity, $1 million slot machine, a gambling museum, the world's tallest observation tower. It was bold. It was weird. It was Vegas, but it was also broke. Stupak filed bankruptcy in 1997. Then billionaire Carl Icahn rescued it in 1998 with a completely opposite strategy. Turn the Strat into the best value on the Strip. Room rates dropped to $50 to $80. Target budget-conscious players. Forget luxury, be cheap and cheerful. This strategy worked for years. Revenue grew steadily, occupancy stayed high. The Strat had a clear identity, affordable Vegas for working-class families. But Golden Entertainment destroyed that clarity. After acquiring the property for $850 million in 2017, they launched a massive Strat Rising rebirth campaign in 2019. They spent $140 million on renovations, trying to create fun and excitement, whatever that means. The result? They diluted the value identity without elevating to luxury. According to financial analyst observations reported by Inside Bitcoins and Las Vegas Weekly, the renovation aimed to create a sense of fun and excitement, but it was too vague. Now the Strat is stuck in no man's land. Not luxurious enough to compete with Wynn or Fontainebleau, where rooms cost $300 to $400 per night. Not budget enough to compete with Circus or Excalibur, where rooms cost $60 to $70 and positioning is crystal clear. Average room rate at the Strat, about $80 according to 2025 financial data. It lacks Michelin-starred restaurants, no world-class spa. the 80,000 square foot casino struggles to retain high rollers compared to Resorts World's 117,000 square feet. But here's what makes this identity crisis catastrophic. Tourists can't remember the Strat for anything except the tower. Las Vegas Convention and Visitors Authority surveys show visitors easily associate Wynn with luxury or Caesars with grandeur. Ask them about the Strat. A tower, and some thrill rides, I think. TripAdvisor reviews reflect this cognitive vacuum with comments like less vibrant and don't know what to choose here. The property has become invisible in the minds of the 40 million-plus tourists who visit Vegas annually. While North Strip rivals have sharp identities, Resorts World is Asian luxury, Fontainebleau is neoclassical elegance, Sphere is high-tech entertainment icon, the Strat offers a little of everything and leadership in nothing. It's the worst possible position in a market where differentiation means survival. And the financial data proves it's killing them. 4. The financial death spiral. Let me show you exactly how bad this has become. These numbers come from Golden Entertainment's official earnings calls, analyzed by Las Vegas Review Journal, YogaNet International, and CDC Gaming. Full year 2024 revenue, $667 million, down 37% from $1.05 billion in 2023. Yes, much of this decline came from selling off properties, but continuing operations still dropped 4.1%. Fourth quarter 2024. $164.2 million in revenue, down 29% from quarter 4 of 2023. First quarter 2025, $160.8 million, down 4.3% from quarter 1 of 2024, primarily because Las Vegas hosted the Super Bowl in February of 2024, and that major event didn't repeat in 2025. The Strat specifically? Hotel occupancy down 5% in quarter 1 of 2025, with a brutal 12% year-over-year decline in February alone, according to Las Vegas Review Journal reporting. June 2025 was apocalyptic. Occupancy crashed to 60% compared to 76% in June 2024. That's a 16-point drop in 1 month, 16 points. Company president and CFO Charles Protell admitted during the August 2025 earnings call that weakness on the Strip extended into July, but claimed bookings had begun to stabilize in August. That's corporate speak for, "We're in crisis mode but trying to sound optimistic." CEO Blake Sartini tried spinning positives during these calls according to Class 8 News Now and CDC Gaming reports, pointing to potential economic boosts in 2026 from Nevada's recently approved tax relief on tips and senior deductions. But that's Band-Aid optimism on a gunshot wound. The broader Las Vegas tourism context makes this even worse. According to Andrew Woods from UNLV's Center for Business and Economic Research, Southern Nevada visitor traffic is projected to decrease 5.8% in 2025 and 6.9% in 2026. Gaming revenue is projected to decline 5.4% in 2025 and 4.6% in 2026. Translation: the entire Vegas market is contracting, and the Strat, with its location curse, identity crisis, and billion-dollar competitors, is the weakest player in a weakening market. But wait, it gets worse, because Golden Entertainment's strategy to survive isn't fighting back, it's retreating. 5. The surrender strategy. Here's what desperation looks like in the casino business. Golden Entertainment executives announced in February 2025 that they're considering a complex financial restructuring, selling all of the Strat's real estate plus other casino properties to a trust, then leasing back the same facilities to continue operating. According to Inside Bitcoin's analysis of Golden's strategic plans, this is a defensive move showing the heavy burden of debt. Instead of raising billions to compete head-on, this strategy focuses on stabilizing the books. Translation: Golden Entertainment has given up trying to beat Resorts World, Fontainebleau, and Sphere. They're just trying to survive financially while competitors build the future. Since 2019, Golden has repaid over $750 million in debt through free cash flow and strategic asset sales. Net debt decreased from $1.054 billion in 2019 to $385 million as of June 30, 2025, according to investing.com analysis. That sounds good until you realize what it means. They're selling off assets, cutting costs, and shrinking their way to solvency. They're not investing in growth. They're liquidating to survive. CEO Blake Sartini said during earnings calls that the company remains focused on operational efficiencies, investing in our assets, and returning capital to shareholders. But the reality? Labor costs continue rising with the new culinary union contract. Mid-single-digit labor inflation is expected throughout the portfolio, and competition from $10 billion neighbors keeps intensifying. The Strat controls approximately 1 acre adjacent to the property and an additional 5.5 to 6 acres directly across Las Vegas Boulevard, according to Inside Bitcoins. That's prime development land worth potentially hundreds of millions. But Golden Entertainment is in such financial distress they can't develop it. They're just sitting on it, hoping someone eventually buys them out. So what does the future hold? According to economic projections, not much. Unless the North Strip development creates a spillover effect, pulling foot traffic northward, the Strat will continue its slow death. The tower will keep standing, because towers don't fall, but the casino, hotel, and revenue beneath it will keep eroding until someone finally puts it out of its misery. Drop a comment. Do you think the Strat can survive? Or are we watching the slow death of a Vegas icon? Hit that like button if this investigation opened your eyes, and subscribe because we're exposing more Vegas secrets. The Strat story is a warning. In Vegas, past glory means nothing. Even the tallest tower can become irrelevant if it doesn't know what it stands for. And right now, the Strat stands for nothing except a view of a city that's moved on without it.